Good morning, everybody. Joe Ciaccio here. Happy Monday. I want to go over just a couple things today. I'm always trying to find ways to make our business stick a little bit better. And I'm a firm believer that when you're visiting with somebody and they want to buy either a final expense plan, they want to buy a term plan, they just want to buy something. I think when you add some riders to it, it may make it a little pricey, yet sometimes it could make it a little bit sticky because the mere fact is that you're either insuring the wife or you're insuring a child or a grandchild. So my thoughts is that depending on your relationship with a client, kind of what they want, because if you put a child rider on a program or a grandchild rider, it is going to hopefully be more sticky, and it's probably going to be less expensive for grandchild rider instead of them buying a regular plan itself. But again, that's your choice on how you want to handle it. Now, I've got a list in the back office that shows the carriers that offer the child riders. Now, on the child riders, for example, Aetna has it for the child and grandchild rider, and they ask health questions. So I'm not going to go every single one here. You can go to the back office and look at it. The ones that I'm going to concentrate on is Transamerica's program, not their new FE Express, their original plan, their original program, offers a child and a grandchild rider, and it has no health questions. So it's not you're trying to beat the system or beat the carrier up. They're priced to where no questions are asked. So if you got a client that has a little bit of an issue with a child or grandchild, that would be the carrier I'd recommend to go to. If you put a grandchild or a child on their own plan, it's going through all the same underwriting. When you have a child that is 11, 12, a child less than the age of, like, let's say 16 years old, almost every carrier has a standalone child plan or grandchild plan. A lot of the carriers like doing a grandchild rider plan because it's just very easy to do. It's added revenue for the company. It's something that a grandparent can offer for a grandchild or child. Now, let me see here. For example, Mutual of Omaha does not have a child or grandchild rider, yet they've got a standalone plan for them. Okay? Royal Neighbors has what they call their jet issue whole life. They have them for children that are 18, it's either 16 or 18 or less, minimum $10,000. Yes, there's underwriting, and their prices are very, very reasonable. Okay? Their prices are probably a little bit higher than the mutuals. Okay? Now you say, Joe, I like using CVS. I like using, let me see here, Liberty Bankers. They have a child rider, they have a grandchild rider, yet health questions. Now, if you're 60 years old and you got a child that's 40 years old, the rider is not available. Okay, they've got to be within a certain age, under a certain age to where it is acceptable. Now, you're going to get into a situation where you're going to tell the client, what we're going to do today is that you've got some grandkids and you want to possibly get them a policy. Matter of fact, we really haven't really spoken about it much, but yet a lot of people are taking advantage of how inexpensive it is to put their grandchildren on a plan to leave them a little legacy. And when they turn 18 years old, at your choice, you can switch it over to them and they can have their own policy. If you were to pass away, the policy will automatically go to the grandchild. It does not matter if their health has changed or not. It will become their own policy for them. And usually it's normally 5 times the face amount. So if you get a policy for a grandchild and you do one for $10,000, the parent or the grandparent dies, it is normally 5 times that face amount, so that would be $50,000. So the child, it'd be priced at $50,000, but if the child has some type of medical issues, they're going to slide right on in without any underwriting questions. Now, it's not a hard thing to convince somebody to buy it. What you need to do is you need to build the value. Do your children have the money? God forbid your grandchild was to get into a car accident. These are things you can kind of massage a little bit, so when you're speaking with them, you had mentioned something about having grandkids. Have you thought about getting them a little small policy to protect them? And the nice part about it is that it will grow with them. Something happens, you pass away, the policy goes to them, they can increase it by 5 times. A lot of grandparents want to take care of their grandchildren. Parents want to take care of their children. So what our job is not to sell them, is to give them the information, provide them what it's going to cost, and go over with them the benefits of getting one, because it's going to usually be less expensive. Some carriers will only give you $5,000 of coverage. Some will give you $7,500 worth of coverage. It depends on the carrier, on what the rider allows. It is something I'm going to recommend you guys to start to speak to your clients about. It's just something extra. It can increase your premiums. It can help you out. It can save them money. It's going to give them peace of mind. And for whatever reason, in my mind, I think before somebody cancels their policy, they're going to try to justify, I can't afford it, I'm going to get it later. Yet when you have a child rider or a grandchild rider on that policy, I feel sincerely that it's going to make them think a little bit harder before they cancel that policy, especially if the grandchild or child is there when you're signing them up. So I hope this helps, guys. Talk about grandchild riders, talk about children riders. If not, you can do their own standalone plan to help the family out and help you out as well. With that said, guys, make it a great day. We'll talk later.